You said in early January that you would expect that food inflation will continue to moderate this year. About 2 months later, what are you seeing so far?
Yeah, let me just give a backdrop on SpartanNash, just a little quick refresh on us. We are, as you mentioned, we are a food distributor. More than that, we're a food solutions company. We provide to groceries and consulting services about 2,300 independent grocers, including the retail stores that we operate ourselves. We also, as you mentioned, proudly serve our military around the globe and giving those servicemen and women a little taste of home wherever they may be stationed. So then back to your question, as you saw even from that chart, the overall grocery, so the food at home, has stabilized, and now it's at the point where it's actually, in most months, it's actually lower than the overall other things that people would buy. You saw it's a little bit lower than restaurant as well. But as we think about that, we still are very, very serious on making sure that we do our part to maintain accessible nutrition for people at home and making sure that we are focused on that and focused on getting them the right price points and the right compelling offers they need to take care of their families. And so as we saw this stuff coming, you mentioned the last time we talked, we saw this coming really 2 years ago, and we established this thing we call our merchandising transformation program. And in that program, what we do, it's a continuous program. We bring in our suppliers, we make sure they justify prices they're taking, we make sure they also provide promotional opportunities so that shoppers can get access to good deals to help stretch their dollars at home as well.
Well, Tony, with all that in mind, you think about a moderation in inflation, but then thinking about the chart that we just showed, do the lines ever go down? Would you expect to see deflation at any point?
Right now, we don't have a crystal ball, as always, but we don't see deflation happen. We do see continued moderation and continued flattening that line over time.
Well, let's talk about what that means for your business, because this is something we were talking about with our earlier guest, Ellen Hazen, that you think about your business. You're one of the categories that actually benefited from inflation, from those higher prices on essentials such as food. And now if prices do level off or at least or maybe come down in the future, if you take a look at that crystal ball, how do you respond? How do you grow volume on the back of that if you have prices coming down?
Yeah, it's a great question. So what we think about is we don't actually think about just being a taker on the macro environment around inflation. So we focus on things like our overall long-range plan, which includes being operationally excellent, and the focus we have on things like our supply chain transformation. And in that work, what we do is we make sure that we manage our costs, we make sure we manage that overall, that combined with our merchandising transformation, allows for more predictable, more stable pricing through our system, and allows us to be efficient and effective and predictable to our suppliers and to our shoppers. So all that combined helps us to stabilize the overall effects of inflation.
Well, when you bring your suppliers in and you ask them, to justify their prices, what do you hear? What does the picture look like for some of those suppliers that you speak to?
Yeah, so we're hearing things like they're experiencing spot issues with commodities sometimes, and those things happen. They can happen anything from weather events to other types of events that make it more difficult for them. A couple of years ago, labor was a hot topic, and so we've heard a lot about that. And so what we do is we want to work with them. We want to make sure that they can manage their business effectively. We also want to make sure that we take care of our customers, and we take care of making sure they have, again, stable and access to that nutrition for their family table. And so that's overall, we look at that, we push back on that, so we won't accept the prices sometimes. And other times we say, look, we got it, but we need to invest more money in this, and so people can have access to those great deals as well. The other thing I'll mention is this also offers an opportunity for us to use our private label, our own brand, which we call Our Family. And that's a way to get a lot of access to the same types of products at a great compelling price point and a wide variety of things we offer in our stores. And shoppers are increasingly choosing that as an option to help mitigate the cost of the rising food prices.
Well, I do want to go back to the concept of growing volume, because that's something I wonder about a lot with a lot of these consumer-facing companies. And with a retailer, if you're selling clothes, I get it. You put on a sale, you send people a lot of emails about all your deals. How does it work for the grocery business? How would you actually go about growing volume?
Yes, we have to look at the shopper trends and have to get those insights and figure out what does the shopper really want, what are they looking for. So there's three trends that are really hot and have been for a while, but they're particularly hot right now. It's around value, convenience, and indulgence. And increasingly, shoppers are telling us they want all three. And so what's the hottest one now is value, as you mentioned, right? So we're hearing from shoppers that about 50% of them, they use that as their primary tool for determining which store they're going to shop at. They want to make sure they get the best pricing overall. And it doesn't just stop there. They're also looking for great own brands. I mentioned Our Family a minute ago. 63% of shoppers are telling us that they are routinely choosing that private label brand versus the national brand to help mitigate those costs. The other trends we're looking at around convenience, people we think are using convenience as a form of currency, and so they're actually thinking about, even while some of these items that are convenient are a higher cost per pound, they add time in people's lives, and so they'll make that trade-off. So things like fresh cut fruit and hand-trimmed meats are more expensive per pound, but people are lunging for those in our stores. So that's an important way we find to grow. If we're not growing in produce broadly, we can add that convenient element to it, and then people will take that, and that's a way for us to grow, and it's a way to actually solve a problem for them in their lives as well.
Time is money. I'm sure you've heard
It
that
absolutely
one
is.
before. But you have a pretty unique perspective here, and we're talking at a pretty broad level. But what breakdown are you seeing between retail versus wholesale? Do the same trends apply across those two?
Yeah, so you think about our customer overall, and talk about them for a minute. Independent grocers is our primary customer that we serve, and that's a wholesale customer. So we serve about 2,100 of them overall, 2,150, something like that. And there's about 21,000 of them in the United States. These are folks that operate, typically as family businesses. They operate in an inner city where there otherwise might be a food desert. They operate in the suburbs sometimes, but most commonly, they're in small communities across the entire United States. And they're small, family-run business, and they rely on wholesalers and folks like us to help solve their problems and help think about how they can run their business efficiently. They look to us for the tools, whether it's IT tools or category management tools or insights we can provide. And of course, they look for us for that overall supply that's consistent and predictable, and the pricing makes sense for them as well. So all of that makes up how we actually manage through that. And so, to your question, the retail and the wholesale is sort of the same thing in a way, right? We're serving them. They run retail stores. We run retail stores. We see the same types of trends, but because of our scale broadly, we can offer what a $10 billion company can find and offer to a two-store family chain is really invaluable to those folks.
Well, before I let you go, I want to talk about one of your key wholesale customers, and that's Amazon. Of course, business from Amazon, it's been slowing as they pursue their own efforts there. How do you make up for that lost business? What does your planning look like right now? So
we're doing the same types of tools that I mentioned a moment ago. We're looking for ways to grow organically in our stores and with our wholesale partners, make sure they have the right offer for their shoppers. And we're also evaluating inorganic opportunities all the time. So we're looking for those ways to continue to grow. And we actually are bullish on Amazon. We believe they're going to come back and grow. And so we want to make sure we're a good partner for them. And when they're ready, then we're going to be ready for them.